Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. Thanks for listening to us this morning. We got a lot of tax discussions. It's why we have Lance Larsen, our CPA at Haven Financial Group, on with us. Kim, taxes are relevant. We're in the middle of tax season, and I guess you can just never talk too much about taxes, right?
Oh, I don't know. I think you can. but whether we can talk too much about it or not, we do need to talk about it. And it's great to see both of you. I'm happy to be here with you. Let's take a look at today's show because we are talking taxes. And as Larry said, here we are. Goodness gracious, tax season is upon us. So we're going to talk about uncovering some new tax insight, starting with the taxation of Social Security. We're going to chat about understanding tax retirement and how it treats 401ks as well as IRAs. We'll talk a little bit about Trump accounts, generational tax planning. And then finally, we're going to wrap the show up today talking about risks and opportunities of tax strategies. It's always great to have Lance Larsen with us because he is one of the CPAs there at Haven Financial Group and a guy who I think has all the answers when it comes to taxes. If it'd be okay, let me throw out my first question, guys, before we start talking about taxes and Social Security. And that is, are there, Lance, a lot of changes this year because of the big, beautiful bill?
Oh, absolutely, Kim. When the big, beautiful bill was passed July 4th last year, a lot of those changes were actually retroactive back to January 1st of 25. And so some of the things that we'll be talking about today apply for 2025 as well as the upcoming years of 26, 27, and 28.
Okay, terrific. So we're going to talk about taxes as they relate to Social Security. And let's talk about, the bill and what kind of implications that has on Social Security tax.
So, Kim, one of the biggest things is that people heard the phrase no tax on Social Security. That's a great thing for politicians to say, but it's actually in reality very hard for them to do that. So what they ended up doing is they did an extra enhanced deductions for seniors. So you had to be age 65 or older at the end of 2025 in order to qualify for this. So what that means is that as long as you hit that age status, you get this new deduction, again, subject to all the phase outs, regardless of whether you actually had Social Security or not. If you did not hit that status, so say somebody who collects Social Security at 62, well, then they're not 65 years old. They're collecting Social Security, but they don't get that deduction. And on the opposite side, you can have somebody who's 68, 69, waiting until they are maxing out at age 70 before they turn the Social Security on. And so they don't have any benefits, but those people will still get that extra deduction from the big, beautiful bill.
That's very interesting. So 65 is the magic number when it comes to this tax deduction.
It is.
Okay. All right. Great. So let's talk a little bit more. Maybe we could get into the nitty gritty of this, though, and talk a little bit more about how Social Security is taxed. I think you're right. A lot of people believe Social Security is not taxed, and that's certainly not the case.
So the way that we looked at the taxability of Social Security, we can call those affectionately the old rules, but they are what we've had for a long time. Is that we are going to take the lesser of 85% of your Social Security benefit as the taxable portion, or we do a calculation where we take half of the Social Security benefits plus all your other taxable income to get a number we call provisional income. Then we take that provisional income and we put those on provisional income brackets, which are a little bit different than your normal standard income tax brackets. And then from there, we can figure out how much of your Social Security is taxable. And again, we take the lesser of that calculated number, or 85%.
All right. So, okay, great, Lance. So let's talk a little bit about eligibility and limits, and specifically targeting like maybe middle income retirees. What are they looking at with this new bill?
So that limit is going, this extra senior deduction, there is going to be some caveats on that one. That every eligible individual is going to have 6,000, so a married couple can have 12. Then there's going to be a limit where we start to hit a phase out range. For singles, it's going to be $75,000, and then for married couples, it's $150,000. So for those who are listening, is like if your income is going to be below those two limits, then you don't have to worry, and you're going to get that full $6,000 or $12,000 for the married couple who are both over 65. Mm-hmm. But when your income starts exceeding that limit right there, then we start losing 6% of that deduction right there. So until for singles at $175,000, then there is no more of this extra deduction for them. For married couples, it's $250,000. So if you have a married couple that comes in at $300,000 that are seniors, whether they're collecting Social Security or not, well, they're fully phased out. They're not going to get any of this extra deduction from the big beautiful bill.
Sure. So, Larry, this is a lot of numbers that we're throwing out to people as they listen to the radio, and I recognize that, and I know you guys do too. But I think the whole point of this conversation is that there are changes, and there's a whole lot of people out there who could be eligible to save some money if they're aware of these changes.
Most definitely. And if you're listening and you're going, well, they're only talking about taxes because it's tax season. If you're listening and you've tuned into our show for the last 3.5 years, we discuss taxes, tax planning all year long. Forward-thinking tax planning, especially as we meet with those that are getting close to retirement or in retirement, not limited to those. When planning becomes that much more important, I think Lance would attest that, yeah, we're in tax preparation season now, but come after April 15th, the rest of the year is tax planning. We find it so imperative that people do this because they miss opportunities. It's why we teach Social Security and tax classes throughout the course of the whole year, making sure you make good educated decisions in the most tax efficient way possible. And let's face it, we've just addressed a couple things in the big, beautiful bill. There's a sunset in 2028. And we have a 4-year window to maximize these tax-free ideas, income ideas, do Roth conversions, look at opportunities that may not be here past 2028. So time is of the essence. But if you're listening and you only drop off your tax statements, get your taxes prepared, and then never have a tax planning discussion at all throughout the course of the year, mind you, 1, 2, or 3 times a year, you are not getting the attention you deserve. And I think you should demand more attention. You might be missing opportunities that you wished you were taking advantage of.
Absolutely. Let's tell everybody the number if they'd like to come in and sit down with Lance and other members of your staff to talk about taxes or anything retirement related. The number is 612-504-8400, 612-504-8400. Now, I feel confident, Lance, you guys are getting very booked because, again, this is tax preparation time. But Larry just mentioned it's time right now to start setting up those appointments so you can strategize for the rest of the year, correct?
Absolutely, Kim. So those who had their appointments, it's great to see them. For those who are looking to get an appointment still, please call in and try and set one of them as soon as possible. If we need to do this planning stuff, if we wait till after the tax preparation season and get done with April 15th, then we can have a lot of more fun figuring out how to save money from Uncle Sam.
Absolutely. 612-504-8400. That's the number. That's how you get hold of the folks at Haven Financial Group. When we come back, we're going to continue this conversation about taxes. Next, we're going to talk about understanding tax treatment of 401ks and IRAs. This is the Haven Financial Group Radio Show.